Uh, Rajendra Kumar, sir, you are mute, I believe.
A very warm good evening to each and every one of you present here for this webinar that the Board of Internal Audit and Management Accounting is organizing today. We have on the screen our Honorable Vice Chairman and my mentor in the board, C.A. Charanjot Singh Nandaji, who needs no introduction to a chartered accountant in India or outside India. I also have here with us C.A. Pankaj Soniji, who does great service to our committee, and above all, C.A. Rajeshwar sir, a man who is known for internal audit, a man whose name is internal audit in the part of the country in which he works. That is, he hails from, though he is from Chennai, he currently serves in Doha. He'll be formally introduced to you. And our committee secretary, Aarti Bansalji, and all others who have assembled here today. Warm welcome to each and every one of you. Stakeholders' expectations of internal audit. Who else? But a person who has studied this particular internal audit subject for almost 3 decades now, a person who has breathed life into what he does. Sundareshan Rajeshwar sir from Doha. Esteemed friends, when we wanted to do this internal audit program and when this particular topic came up, so I had suggested to the secretary to get in touch with Rajeshwar sir, and almost a month back, we decided, and we are very kind enough that he gave us his date. Thank you, sir. Thank you for being with us for our audience today. And thank you, Pankaj Soniji. You have been a great source of support, and we look forward to your support in future also. And I'm confident that you will do the needful. Nandaji, as always, you have been a mentor, you have been a guide. You have been a person who has laid the path for this board. You have been a person who has breathed internal audit off and on in this board, and we are only following your footsteps. Thank you for your blessings, and thank you for being with us at all times. I request the secretary to please take over the next proceeding. Over to you, Secretary Bharti Bansalji.
Now I invite our Vice Chairman to interact with the participants of the webinar.
A very good evening, ladies and gentlemen. My chairman, more popularly known as a GST man, the person with impeccable track record, CA P. Rajendra Kumar, who hails from Chennai, the very eminent speaker of today's discussions, CA Sundareshan Rajeshwar, who comes from Doha, my very dear friend, CA Pankaj Soni, who hails from Aurangabad, and the secretary to this committee, CA Aarti Bansal, who hails from Ghaziabad. Technical support, Ayaz, Surbhi Tyagi, again she is from Ghaziabad. And all participants who have come here to go home more enlightened. Ladies and gentlemen, I would like to tell you just one small thing. Internal audit is a sunrise industry. It is essentially a management function, yet the expectations from management is of paramount need. Management appoints a chartered accountant or an internal auditor is appointed for the audit committee or the board, as the case may be. And in the process of doing the internal audit, they advise the boards. And when they are so keen to advise the boards, the most pertinent, important thing is that they have to very effectively understand and then translate what is needed by the board. No fixed reporting patterns. Scope is there, but the entire scope is for betterment of the entire proposition. And therefore, the chairman, C. Rajendra Kumar, thought it fit to call a person of the stature of CA Sundareshan Rajeshwar, who could take us through the entire genesis, the entire process by which we would all understand internal audit, use them in our lives and perform. I want to tell you that I am also the chairman of Digital Accounting and Insurance Board. And your institute, the Institute of Chartered Accountants of India, under the aegis of DAB, is the first in the globe to come out with 23 forensic investigative accounting standards. And on 1st July, we are making them mandatory. 1st July 2023. So time has come when we have to gel our forensic knowledge with internal audit knowledge and serve not only the stakeholders, not only the clients, but the regulators and government as well. I will not speak much on the subject. We have an expert, Mr. Rajeshwar. So I would give all the dice to Madam Aarti Bansal, and she can call the meeting to order. Thanks a lot, ladies and gentlemen, for giving me a patient hearing. Over to Aarti Bansal. Aarti, the dice is all yours now.
Thank you, sir. Now invite our moderator, CA Pankaj Soni, sir, to introduce the faculty and lead the webinar.
Good evening, everybody. It's an honor to introduce such a learned faculty, Sundaresan Rajeshwar, sir. He has almost 8 to 9 various degrees and certification courses. His BA, FCA, CIA, CISA, CFE, and others. The list continues. The degrees or the certificates are longer than his name that can be written. It's an honor to have you, sir, here. Rajeshwar, sir, has been employed with the Tyser Group of Companies, Qatar, a business conglomerate and a group head of audit for over 2 decades. Previously, he was heading the internal audit function at Maruti Suzuki MRF Andhra Bank in India. He was also the past chairman of ICI Doha chapter, and he was bestowed with the CA Achiever Award in 2017. He has contributed to the chapter as a speaker, as a panelist, as a moderator on various advisory committees. Richard Chambers, a global internal audit advocate, advisory for audit board, and the former president of the Institute of Internal Auditors, has named Rajeshwar sir in the 4th annual Internal Audit Bacon Award for 2022 amongst the internal audit thought leaders around the world, and a dozen who made a difference, who have contributed significantly to advancing the internal audit profession worldwide in 2022. Rajeshwar sir has been a board member, founder, past president, chief advisor, and contact person of the Institute of Internal Audit's Qatar chapter since its inception for more than 15 years now. He was a member of the Global Committee of Research and Education Advisory from 2016 to 2019. And he is currently on the board committee for global advocacy for 21 to 24. Rajeshwar sir has participated in the IIA Global Assembly as Qatar's representative in the Thought Leadership Forum for last 10 years. Rajeshwar sir has served as a region advisor overseeing the Toastmasters of the Middle East and Pakistan. He has been in the Toastmasters International Leadership for over 2 decades and was district director for 1890, where Qatar was ranked as the topmost district in the world. It is an immense honor to have such a learned faculty in this field, internal audit, where really an value addition can be given by the chartered accountants as professional, which will be helpful to the peer professionals who are at various levels. Maybe it could be statutory auditors, maybe it could be to the other stakeholders, like bankers or shareholders or various. It is a field which has vast requirement, vast knowledge is required, and there is a lot of scope of value addition which we can serve. And of course, while doing that, other than regular compliance, while doing this, we can minimize our legal liability, or legal risk as a chartered accountant that we have always been carrying. So now, without wasting much time, I would like to hand over the dais to our learned speaker, CA Sundaresan Rajeshwar sir. Over to you, sir.
Thank you, Pankaj Soni, for that nice introduction. Sometime when I hear it, I think check whether it is me you're talking about or somebody else. So I think CA Charanjot, I think Nanda Saab, I think we were together in a couple of, earlier.
Yes, sir. I remember, sir. At this time, myself and Arindam Kumarji are going to Amsterdam for IA International Conference.
Yeah, correct. I was there previous year. But and
I recollect it.
She started with Nanda Sahab started with saying that we are living in the golden age of internal audit. In fact, you stole my first words. This was supposed to be my first word.
But
For
both
four
of us think on the same line, sir. Therefore, I have said this.
For four reasons. Number one reason, Board of Internal Audit is now having a chairman at the stature of Rajendra Kumarji, whom I know for some time. He had come to Qatar. We have been together. I think he visited also my house when he visited. And also you, Mr. Nandaji, as a vice chairman, and that shows, very senior professionals are engaged in developing internal audit as a function. It shows the seriousness that the CA profession is giving to the function. So that's the first reason. Second, when I see there are many conferences happening. Last Friday, we had a conference which is for risk conference, which was actually done by the Institute of Auditors with PricewaterhouseCoopers, PwC. And we just opened it for a week and we had 350 people confirmation and they attended. We had to trim down to 300 because of the cost implication, and also in a 5-star hotel, we didn't have enough space. Then we removed others, but it was 350 people. So, and also the International Conference of Institute of Internal Auditors is coming up on 9th July to 13th July, which is again, it's a very prominent, and I saw some speakers from India and our Asian countries. Earlier, it was never like that. And third thing, internal audit is part of the many conversations in business and boardrooms, particularly, sometimes for good reasons, sometimes for not so good reasons. But we have been, so long as we are not ignored, that means our profession is in forefront. We are being recognized. The fourth reason is the global risk landscape has changed. It's very volatile now with technology, with a lot of regulatory things, a lot of geopolitical activities, and the culture. The culture also has changed post-COVID. Some level of culture has changed. And there is a worldwide talent shortage. In fact, I want to recruit some good young auditors. I'm not able to find from India. And even if I find something, they want more, they're demanding more than my budget in Middle East, in one of the richest countries in the world. So that means India is doing so well and a good auditor can command good amount of money. So another thing I can say, my personal experience, my LinkedIn gets about 20 to 30 hits every day. And I'm not seeking for job. I'm not also, I'm giving job, but it's not for such large numbers. But so many people are interested in knowing my profile, wanting to engage with the conversation and things like that. So again, it shows that auditors, internal auditors, a profession is now in a golden age, and it is up to all of us to nurture it, make use of it, and probably benefit out of it. So one thing I want to say when I talk about internal audit, as Qatar, where I'm staying for almost my second home for 22 years, we hosted the biggest sporting event, FIFA 2022. I was also part of the risk management for FIFA. We had a committee, they are professionals, but I was nominated as a volunteer for a risk management committee. I remember hearing about the risk management in South Africa when I attended a conference there. And one of the speakers was talking about risk management in FIFA in an Afro-pessimistic world, as he put it. So this was, we did risk. So any occasion like that require enormous amount of preparedness, so that it is done in a proper way. So today morning, when I was looking at something, I saw India, one of the biggest businessman from the US is saying, if I don't do business with India, I will miss out huge opportunity. So my first home, my country, as an Indian, I was so proud that one of the topmost businessmen, not Indian, I think it's an Australian, he refers to India as going through a major transformation in terms of the business and opportunity. So I think some of us should even think of coming back to India to start our career again. So So now I'll just put up my presentation. Okay. I mean, this is something which, no, when I looked at the website in Google, I found there are plenty of jokes on auditors. I found more than maybe hundreds of them. So I picked up one of them. We are auditors. Are we busy? This will take a second. See, the fellow is so right. What is he a stakeholder? So actually, these we groomed up to go with an appointment, tell him what audit means and what we are there. So are we treating the stakeholder the right way? Look at this, another one. It's a small, again, for fun. There's already so many reports in, so many reports out, and one of the auditors is giving another report. So he doesn't know what to do with it. So does our recommendation reach at the right places? Does it get into the value addition what it deserves? In fact, one of the things which I tell my staff is also that our product as internal auditor is our report. If you are not able to get the report or recommendations implemented, we are not selling our product. Our efforts may go worse. So I was telling about 3 jokes. One joke I said, where did homeless auditor leave? Where does homeless auditor leave? The answer was tax shelter. It's as a joke. But he says leadership in internal audit, to me, and drawing an analogy, leadership in an internal audit function, and as we provide leadership in internal audit function in the organization, and probably in the organization as a whole, it is not, we provide shelter to the organization in the right manner. Look at another joke I found. Why did auditor always propose to a banker? Again, the answer is says that they know to reconcile the differences. Again, the analogy here is we balance our special knowledge and plus special knowledge and general knowledge and put together to find the right way for right solution. So having said about the fun part of auditing, let's look at the serious part. The stakeholders can be internal audit stakeholders. We are talking about stakeholders. Particularly, we are talking about stakeholders' expectations from internal audit. I'll focus primarily on that, not because as though Nandaji said that my thing may cover much more, but I'm going to I'm limited by time of only about an hour plus, so I'll confine myself to the stakeholder expectation from audit. So look at internal stakeholders, internal assurance providers. They are one of the stakeholders. Like it may be compliance, it could be risk managers, it could be even a finance function or in the second line. Or then second is the executive management. It can be C-suite executives, CEOs, or board. It can be any or even other line manager if they are other than the executive management. Then process owners. Okay, they also guide for. It's an internal process on. They want guidance on whether the process is right, deliver the right solution at the right time for the right people. So the process owners also depend on us to ensure that in the process of in our internal auditing, we give them that peace of mind, that comfort. Then committees and other formations. There are many committees which come up. I've been part of many committees in my organization when we were migrating to Oracle. Then we had a steering committee for IT. I was part of IT committee. Now we are going through a restructuring process with a new board and probably a hand holding for an IPO. I'm part of the committee. So this knowledge, what we have about the organization can come handy to many places, provided we are able to get that seat at the table. So second thing is connected external. So professional bodies, like we mentioned, I'm part of the Institute of Auditors, I'm part of Chartered Accounting, Institute of Chartered Accountants of India, Fraud Examiners Association, Institute of, ISACA, that IT audit, So the regulatory bodies also look at, as a stakeholder, what we are giving to. Then shareholders of the company, they want to make sure that they're getting the returns right. The assets are used properly, value addition taking place. There is no depletion of value. Then communities, because unless the organization is viable and organization is making profit, you cannot say that it is successful, because no say sick organization can add value to the society. So because they can't pay taxation, they can't give employment, they can't give build infrastructure, they can't be productive. Even when as a country, as Qatar, when we looked at some of our businesses where I am working for, the company is not really profitable to the effort we put. So initially, the Middle East has something like a rentier mentality, meaning people are happy in renting their establishments, renting their land, lending their warehouses, and getting their rent out of it. They were happy with it. There was no value addition there. It was only an asset, using an asset. But from there, we took a conscious decision as a country to have a self-sufficiency in food production or many other things. We took a decision to, even though some of the business may not be profitable as we expect, we should continue and sustain it for the nation. So this is what, sometimes the civil society or community require our guidance or our advisory for such actions. So then connecting between internal and external are the governing body, the committees of governing body, objective and assurance providers. So these are the connected people. The stakeholder, to define stakeholder is any person, group or organization that can affect or can be affected by the internal audit activity. So any person or group or organization that can affect or can be affected by an internal audit activity. So it is quite wide then. So look at them. How many are? Look at this: CEO, external auditors, customers, board of directors. We mentioned some of them are internal, some of them are external, some of them are in between that. They are the connectors. So they are all employees also interested, because if it is governance is not looked after, the assets safeguarding is not looked after, they may not even have a sustainable employment. The company may not be sustainable. So succession plan is not. So they may even have their fear of going out of job. So it is taken me all my life to learn what note to play. This is why he's a guitar player. Yes, he says that in the sense that every time you learn, every time you play, or when he plays, that he is learning something. And he's learning from the mistakes, what he made, and he corrects himself. Similarly, when you deal with all these external or internal, all these stakeholders, there are a lot of learning that happens. There is something, today's world, post-COVID or post this technology disruption, one thing we have to admit is we don't know as much as we think we know. We don't know as much as we think we know. So because today the knowledge is in their fingertips. If you talked about so much long my qualification, but if I make a mistake, there are people who can find out within no time, because they will quickly find out from the Google, and if they make some mistake about figures or something, they'll come back to you. So we should be conscious of such knowledge, and we should be able to completely update with the information, the right information. Let's see, this is much more, the same stakeholders. There are many more. Institutes are there, different human resources there, audit clients are there, corporate secretary. So they are quite wide at large. So I want to talk to you about a story, because I think it's a good time to start. Too much of heavy stuff will make you bored. So this is a story from what I call it Aesop fables. It's a story with a moral. It's a small short story. The book is called The Miller, His Son, and the Donkey. He says Miller is a person and he wanted to expand his business, that is mill, in his country, and he lived with his wife and one child. So he decided to sell his donkey and make some money and use it in the business. So his son and the donkey sets out for the fair. He can immediately these two he and his son was walking, and the donkey, all the three were walking. The couple of girls came out. Have you ever seen such a stupid people? They are walking when one of them could sit in the donkey. So his miller immediately goes to make his sons sit on the donkey. So the donkey moves. After some time, a few old people will see this. And they said, oh, look at this youngster. He has no courtesy. His father is walking and this fellow is sitting on the donkey. So again, the miller decides, okay, he gets into the donkey and puts his son down. After some distance, again, young woman comes up and says, see this lazy man. He's letting his small child, young fellow to walk. He can't even keep pace with the donkey. And he's sitting on the donkey. So he takes his son also and sits together in the donkey and starts walking. So then, after some time, when they reach near the town where the fair was to happen, so some people, the townspeople, say, oh, what is this? Such a cruel people. You are making the donkey to carry both of you. You should be other way. The beast should not be put into such trouble. You should be carrying the beast. So they both get out of the donkey and tie the donkey in a pole like the picture which is shown and start walking. Everyone will be amused. All people come around, make fun, make noise, and seeing this strange sight. So as they cross a bridge, the donkey got very, very annoyed and jumps out from the pole, and it falls into the river and probably died. So the message here, if you try to please everyone, you please no one. So don't try to please everyone. So all the stakeholders cannot be pleased. So you have to prioritize. I am coming to a slide later, which will prioritize. Now let's see what does this what is the opinion of the people on the expectation. What is the expectation of the people? Look at this chart. He says the premise here is, or the caution here, the stakeholders are not aligned on internal audit value and performance compared to management. Management's perception and opinion about internal audit contribution is different from board. So the board is one stakeholder, management is another stakeholder, and this study here, which shows that the board values internal audit 79%. They are serving. They are okay up to 79%. Whereas management feels that they are only 44%. So look at the performance criteria. Management feels that the board feels that 56% they are okay with the performance of internal auditing, whereas the management feels only 37%. Look at the third aspect. That's how they are addressing the critical risk. So board feels that 60% board members, so 60% of the board members believe that risks are well managed by with audit, and they have managed it. And whereas management feels 52%. That means the difference is matter of concern. There is a perception, there is an expectation, and there is a satisfaction. We'll talk about it in another slide as we come to it. So let's stakeholders. We talked about the expectation gap. So what they're consulting on business process improvement. According to this, 73% is an important. The importance is 73% is important. Business process improvement should be taken care of. So it's up to 73%, we are okay that internal auditors are delivering. Facilitating effective risk management, 71%. This is based on a common body of knowledge, CBOK. It is a 2016 report from CBOK. In fact, one of this CBOK, I don't remember which year, I think 2017, I was a member, and I was given a replica of a of a tile which will be placed in the Institute of Internal Auditors US headquarters. It's a big tile which they write any research will when they finish or publication they finish they put it in a small a tile there. A replica of the tile was given to me. It was a great feeling that you're part of something, a new knowledge, a new value add. So if this study is one of such studies saying facilitating risk management is 71% important, and we are, up to 70, alerting and emerging issues, 66%, identifying emerging risk areas, 65%, risk management practices, 64%. That means stakeholders' expectation gap is between 100 and this. That means if you look at it, the expectations and satisfaction is not exactly poor. It is satisfactory or even better. I can say it is more than satisfactory. It is on a good scale, good level. Now, stakeholders, again, another CBOK report, it says, okay, what is this stakeholders report? Again, based on CBOK, what they say? We have been, if you look at the internal auditors started as a disbursement check. We were mainly appointed for checking the disbursements are right, the supporting vouchers are right, or correct, or evidence for expenses are proprietary, based on the proprietary interest. And or looking at as accounters, probably count in the warehouses some inventory to ensure that the assets are existing as recorded in the books. Third, we went into control, so our financial reporting. We only looked at integrity of financial reporting in terms of the right accounting standards, following right accounting standards or right accounting principles and all that. So it is the control and financial reports for the third stage. Then we got into the fourth stage of risk management, which sort of an open door for us for many things. The risk management still continued to be one of the critical internal audit contributions. So then the currently just not all, because risk itself is a specialized subject. There are risk managers and there are risk institutes which specializes on risk related research and the methodologies and all that. So now we are looking at strategic risk, how the organization's strategic risks are addressed by auditors. So this is the now way things have gone. So what they are saying, foundational elements, we should do foundational elements that we do well, preserve it. See, assurance is one of our foundational level activity as in internal auditing. Significant areas for assurance is there, depending on the vertical in which you work. If it's a financial institution, there's something. If there is insurance, there could be something else. If it is a contracting, it could be something else. So remain updated with the changes that is happening in those assurance arena or the area. Then communicate those things well. We have that competency. We have that knowledge. We were the pioneers in doing that. So preserve that foundational elements. That will give a great level of satisfaction for them. Then look at this. Explore more advisory work. Because many advisory work, one point of caution, sometimes some of the clients or some of the audit clients may think that, may divert you from your from your assurance activity or some investigation or some to advisory to take your time off so that you don't focus on that. So make sure that you can do advisory work, but not at the cost of core assurance activity. Do the advisory work, but not at the cost of core assurance activity. Advisory work also gives you a huge value-added perception and belief from the stakeholders. Because I've seen that many times we get advisory work, we get to meet with different management or consultants or parties who could add seriously significant values for us. Focus on risk management in your advisory. when you do it advisory also, focus on risk management, because again, that's our foundational thing. Understand strategic risk and educate on non-traditional strategic risk. There is strategic risk, which can be, sort of put it into paper, but sometimes non-traditional strategic risk has to be presented in a way that it is convincing, it is sold, it is understood by the people who have to take action. So this is very important. So when you're talking it's advisories, should also talk about emerging risk areas, facilitating and monitoring risk management practices. No, assisting in risk management is second highest value add from the internal audit. This is the perception of the audit committee or the board or other stakeholder, that as our assistant in risk management, in terms of facilitating or in terms of giving even a letter to the effect that risk management practice is done appropriately, gives a huge value add. So then for this, we have to do one important thing. Internal audit objectives should be linked to companies' strategic objectives. Internal audit objectives, see, build your soft skills. This is what I told you. Soft skills is today's hard skills. Now, the difference between the one who's really successful compared to one who is highly educated, sometimes could be the soft skills. If you cannot communicate or sell or conceptually make other people understand the concept, then your knowledge becomes not saleable or not acceptable. So you have to build that soft skills. That it should be even in the CBOK, Common Body of Knowledge study, for over 10 years, communication for internal auditors was one among the top 3 requirements of internal auditors. So make sure that if you are internal auditor, you need to focus on your communication and soft skills. Soft skills includes relationship, conflict resolution, and so many other things. You should focus on all that. Otherwise, you hit the ceiling and you remain not at the director level or go beyond as a CEO, something like that. So you have to be careful. Now, balancing the expectation. We know what is expectations, so how to balance the expectation. So engage with your stakeholders as business leader, not a technical auditor. If you start talking jargons, believe me, they'll put up. Particularly, there are some people in some part of the world, where their attention span is very, very limited, because they are coming from that sort of a background. So we need to tell what we need to tell on a very crisp manner. So try to assess your risk. So don't talk technique, talk a story, tell a story, or that can be related to business. So try that. There's a good saying, broad enough to be interesting and specific enough to be, understanding. Specific enough to understand, broad enough to be interesting. So you have to mix broader and specific things to make it a good deliberation. So next one, coordinate with the second line. The line is getting very blurred. Many times, even I feel it at my workplace also, because they have the data, they're close to the events more than us. They set, like in the finance or the legal or an HR, gets into the major decision making forum than us. Of course, they know our ability, but by default they get. We come in only when it is needed to resolve some issue. So we have to coordinate with second line and make that exceptions with us. So provided, this is provided our objectivity and rigor of work is properly tested and verified. That is, our objectivity should not be affected by coordinating with second line. Then balance competing demands. Strong relationship. Take positions when needed. Stay grounded in professional obligations. You have to take position. There's again a saying: if you don't stand for something, you will fall for everything. So, irrespective of who is at other end, when you take a stand, you take a position. You have to be steady with it. You have to take the decision with proper thought and analysis, and make sure that it means good to the business. Build interpersonal skill. Again, it's coming back to another soft skill. Now, assessing stakeholder expectations. Let's see. How to assess stakeholders? It's a very important thing. If you don't know what is their expectation, no. It's something like saying, if you don't know where you are going, any road will take you. Or there's a saying that if you don't know your destination, how will you know when you reach? So you have to assess the stakeholder expectations to move towards that direction. So let's see, what are the ways to do it? One is an ongoing informal discussion with audit committee members. It's very critical. 69% feel that this is one of the best way of assessing audit committee. You cannot discuss everything in an audit committee meeting. So sometime offline, over a cup of coffee or on a meeting in his office or in the office, then that will help us to understand their expectations. Regular formal meeting with audit committees or whosoever other stakeholders are there, board or board members or CEO, have that formal meeting. Discussion with full audit committee to assess collective expectations is very critical, because audit committee may have various other professionals. It could be safety advisors, or it could be some strategic advisors or business or technical. So getting to know from them what is the collective expectation is a very critical thing. Formal surveys, which is not so popular because, again, the reliability of survey, because as a courtesy and sometimes as if it is going from internal audit, because I've seen this even in the internal audit improvement program, the quality QAIP, quality assurance and improvement program, that survey which we sent out, people are not comfortable to give a right opinion. They just give them some opinion which is not as a part of courtesy or to prevent any future, conflict or something like that. Discussion with top management leadership. This, really speaking, top management, to my experience is that top management really don't open up. As sometimes they don't even know what to expect from auditors. So they don't want to figure, or they don't want to come across to us as someone who is ignorant of governance or transparency or good controls or the compliances. So they don't come up to discuss this. Then 30%, this is what 30% CA do not discuss and continue to perform against outdated expectations. This expectation keep changing because, again, during COVID, we had a lot of changes that has to be made. So the expectations from audit was also changed, because we cannot do the verification of assets. We do not know the performance. Many of the things got cut up, even to the extent of we employ about 8,000 people, but we didn't even, time and attendance system could not work because it was based on a thumb and nobody was touching that machine anymore. So what are the alternatives, solutions? So these are the things CA would like to know. Even when, as a country, Qatar had an issue with, in a geopolitical issue, what we call it blockade. We are cut off from some 4 or 5 countries around it. But we needed to act swiftly because there are a lot of contracts, there are a lot of materials coming, a lot of money involved. How do we? So we need, unless we interact with the stakeholders, we'll never know and never we can access their requirements. And unless we assess the requirement, we'll never know whether we are going as per expectations. So the expectation from board's perspective, we'll go specifically to board. And so board, one of the expectation is hindsight. Don't talk what they already know. That's a hindsight. Give some insight. Okay, that's good. Insight is at least, you give some perspective, some knowledge, new knowledge. They want something like foresight. What could happen in future? We do something, what could be the future? Of course, we are not like predicting a future, but at least a foresight based on our knowledge, experience, and skills. So second is to have sharp focus on risk horizon, business knowledge, technology to add value. No, over the years, we learned that we had to be proactive, we had to be flexible, we had to be adaptive, we had to be capable of using various technology and business analytical models. And that will help us to anticipate new risks. That will help us also to find solutions for resilience. So this has to be, this cannot come unless we make an effort to learn in depth, have a deep dive into some of these problems, which could even come to your desk. So we have to make a conscious effort to learn, sometime to unlearn, sometime to relearn. So, I read a very interesting statement. It says, the illiterates of this century or this decade are not one who cannot read and write. The illiterates of this decade or this century are those who cannot learn or relearn or unlearn. So if you remain unlearning or relearning, you're as good as illiterate. You will carry with old information. Partner with business to enable digitization. We had a session last Friday. There was a 1-hour presentation from one of the eminent speakers about even digitization of in internal audit. It was a very deep, from A to Z aspect of internal audit, how it can be digitalized. Okay, digitization is different from digitalization, which is more of a tools and applications and all that. So you're talking about digitization, and it's so even internal audit as a function can be digitized with various application now it's available. So provide a continuous assurance to board. And on risk design. So what is the KPI for internal? What they expect from audit? Board expect an approved audit plan. Are we doing as per the approved audit plan? KPIs, key performance indicators for clarity. Do we complete the approved audit plan? What is our coverage? So today, new tools and technology, we can't say, okay, I did this test check for 50%, but today we can even cover with many of these tools, analytical tools, almost 100% of the samples. So outstanding action, what are the actions we proposed earlier which remain not acted upon? What are the vintage of those actions? Then what are the IT and technology risks? These are the expectations from audit from the board's perspective. Now audit committee and board comes under almost same. The audit committee is a part of the committee by board. So good business leaders, I just want to say that when audit committee gets so many, reports from different people like financial controller, risk and control professional, fraud investigator, quality. So internal auditors to make a differentiation, to say something different. And there's again a metaphorical thing. We always talk about seat at the table. But important thing, we have to pull the chair. Are we pulling the chair? Are we making our requirement as internal auditors, our requirement indispensable for the organization? Only if we do that, it makes we find that we are in the right track. Now let's little more on the board. We look at the board. Board primary needs is, it's as he's saying, assurance, insight, and no surprises. Nobody wants surprise. If anything happens in my company, my chairman asks only two things: why it happened, where were you, Of course, third thing he says, how it can be prevented in future. So if something grave happens, he will ask, why I'm employing you? I mean, he has right to ask, why should I employ someone who I pay so much or spend for him so much, and what is he doing? So we have to be very conscious of the fact that as board and audit committee, our KPIs are looked at properly. Corporate management can also corporate management what they expect from the corporate manager. What is that they are expecting? They are expecting advisory support. They may have some typical problems. They would like us to resolve it. They like to look for cost saving because they may be under pressure from their CEO or someone on a higher up. What is the saving you're making out of, If you're doing the same thing with a lower cost, that means you're more efficient. So their efficiency is measured by that. Then cost, what are the cost benefits of certain, they want to do some automation or they want to bring some new machine. What are the cost benefit associated with it? Then, when we give a report, what is the rating of our report? How many, red or how many yellow or how many green findings are there? Sometimes, the red one goes to the CEO and CEO will give him a time frame to reply within, say, 2 weeks or a month. So he is conscious about that. So our KPI also is rating on the report. What are the findings? Finally, do we have finding which is value? And what is the time to issue report? Because sometimes people do so much field work that the data they start compiled and the time they issue the report. I've seen some government organizations in some places. It takes 4 months for them to complete an audit. To me, that sort of information is of no use, particularly today is the age of agile auditing and all that, and we cannot afford to have so much time lag between the audit, the field work, and audit closing and completion and issue of final report. Even to the extent, even my own case, we used to have people taking 2 months to finish one company. Because I manage about 20 companies. So then we found that we had to make the audit scope less. We do separately for, for factory, separately for accounts, separately for HR. And we split it and complete the audit much earlier so that we issue multiple reports instead of one large report of 40 pages. So this is how we can work on it. Then, stakeholder regulators. Regulators, another stakeholder. He looks at, regulatory scrutiny or greater risk. Internal audit is co-shares. I mean, they cross hairs too. And financial regulators see us boot on the ground. That means they feel that we are supporting them. So what is our KPI? Environment, health, and safety. It's a big thing. Today, again, in the risk ranking, the health and safety becomes very big because even if risk is based on the probability and impact. The probability of something happening could be 0.01%. But what is happening is death of a person. Even then, it is the highest risk. So that's how we have to look at the probability and impact based on what is the impact. So now look at the KPI for internal audit from regulators. They say their primary KPI, confirmation that management controls seriously, takes controls seriously, every control seriously, that risks are well managed. So this is their primary expectations from audit as a regulator. So what we have to do as KPI, spread of ratings. When we are putting the rating, don't take maybe green, yellow, or 1, 2, 3, 4, 5. Maybe we can even go to better pointers. Age of outstanding action. If something is not done and it is not done for a longer period, despite being risk, find out those cases. And the third thing is trigger words. The regulators always look for trigger words. The breach. If we put in audit report, we found a breach of control in something, some financial this thing, or some safety training or something. the breach word will be picked up and they will look at it more, they will scrutinize it. And non-comply. These are the words, and even regulators can ask you working papers. So you have to be clear. You have to be clear that you have to keep the working papers properly for such regulator scrutiny if it deals with some high risk related to regulatory things. Now, I am from a company which is a family-owned company, though I worked with Suzuki before. We are also dealing with Suzuki here. But what is that? Many of you would have also been working in family-run business because many companies started out as family-run business. If you look at Goenka or if you look at Reliance, big companies in India, Reliance or many other companies, or TVS, which is in South India. These companies started as a family-run business, and it again gone into the public hold company, public. So the family return, even Tata's, it's a family, Birla's, it's a family, but their shareholding or Infosys, it's a family. But it's from the small shareholding, they've gone into big conglomerate. So what are their expectations? Most of the time, the principles are based on the social cause and overriding awareness of internal stakeholder protection. Internal stakeholder protection. They look at internal stakeholder. Of course, they've gone into typically corporate. This may not apply. These are applicable still a family manager's account. So internal stakeholder that is based on the principle they derived over period. Sometimes this principle undergo change, often focus on based on external influence of the family members who have taken up major position, and they leave the principle behind and they come with the changes in the governance structure. So there is one important thing in family business, which particularly applies to Middle East countries, based on my 20 or 2 decades of experience, is trust. Trust is the critical factors for people, for the ownership to employ people, to continue with the employment of the people, and to go with any advisory things. So how do we trust? The trust also becomes a selling point for the company because the customers started trusting the product, trusting the services, trusting the brands the family promotes, trusting the communication that they come out with. So all that is because the family has nurtured for probably third generation or fourth generation those values as an important criteria. So their products are reflected, the service reflected, and everything else that goes with the company as something closely associated with trust. So the tools for trust, if you look at what are the tools for, how do you identify these family debates? Read their annual report. You find a lot of things which comes from the legacy activities or legacy, say some investments. So the legacy annual report will state few legacy things. They look at the websites. Website will again contain the pictures of the founder, chairman, founder, investor. Then look at the social media. Even today, they continue to have those characteristics. So this is broadly on a family business. There are a lot of research done. This family business is something like, even in the Middle East, 60% of the turnover takes place from the family business, particularly not in the oil and gas, that of a sector, but in the non-oil and gas, non-hydrocarbon business. So this is one thing I liked so much about, this is based on a client service approach. Client service approach is propagated by a writer called David H. Meister. He talked about in his book about how to manage professional services firm, like a CA firm or in a law firm or any similar firms. So where client satisfaction becomes a dynamic thing which need to be managed and monitored and managed properly. It's a nice, he talks about communicate regularly with stakeholders. So we have to look at also as one such person, because we don't have a no, yes, what is the peak performance? So whether last year or the internal audit performed better than this year? We cannot say that. Not number of reports, it is not the number of findings, it is not the involvement in the special project. It's all become a little bit abstract. So how do we, we have to monitor these sort of things. And also we have to sell internal audit. Many people forget to sell it. We have to sell audit to sustain, if not survive. We don't sell internal, we may not even survive. Because this is something they may look at as easier thing for cost reduction. We have to sell internal audit. So how do we do that? Communicate regularly with stakeholders. In fact, I come out with every month for last 20 years, something called audit alert. 1 page on a subject, a topical subject, to the company, all senior management of the company. It's called internal audit alert. And even the latest one which I issued was about compliance. Because of a lot of regulatory changes are happening, it's compliance. So what are the compliance need? Basic thing. We can't write everything, at least fundamental thing, which makes them interested to know more, read more, and and then understand more and then implement. So we have to. That helps. And many people say that if I file that 20 to 12, this audit alert, I can start a business. It is like a book now. So people do keep it. So even though many things supersedes, like when IT security, when we talked about 10 years earlier and now completely changed. The cyber security has got in and many other things. So second thing is prioritize client concerns. Consider the risk and priorities. And when you prioritize client concern, the clients will feel we are giving voice in the audit, their voice in the audit. They like to hear that. So you have to prioritize their concern, and you put that in your audit program, give a report on that, give their opinions on that. They feel very close. They become another happy client. Their satisfactions will be much higher. Then third thing, trust the team to make decisions. Most of us, leave the decision at head office or corporate office. And the field auditors will have very little authority. So anything the client speaks to my field auditor, they will say, irrespective of his designation, maybe manager, or assistant manager, or senior auditor, he will say that, no, I like to refer to my CAE, chief auditor. So that should not, that sort of, make the team weak, make the perception of internal audit weak. So we have to empower people to do well. So gather meaningful feedback. This is again very important thing. People don't take feedback. Having a discussion, getting the feedback, we should not feel bad about it. We should encourage them. Because only people who are concerned about them, who find, who value you, and who feel that by giving a feedback, it would be better for you. Only they will tell you the things, honest thing. They said it's a friend helping friend to succeed. So you have to create the relationship to be a friend, to help another friend to succeed. Otherwise, people will be very easy and transparent auditing. This is the one word which I found. The transparent audit is how we found the problem. Telling the client how we found that problem. Many times clients are saying, how did you find that? We were doing it, but we didn't know that. How did you find that? You converse with them. Don't hide anything. Okay, unless it is very sensitive, it's about a fraud or some irregularities or impropriety things, then don't talk. But otherwise, you're sharing makes it a good practice, and it's called transparent audit. I think it's good time for you to. Now let's get into the last few things before I open up for this question answers or other discussions you may have. Prioritizing shareholders. No. So there are 4 types: high influence, low impact. You collaborate with them. High influence, high impact. They are critical stakeholders. They're most significant and influential relationship. You cannot ignore them. You have to put them in priority. Then same thing with the low influence, low impact. Put them, you monitor, inform them, keep the conversation going. Then low influence, high impact is professionality. If I do something which is not as per the CA code of conduct, I may lose my membership also. CA. So you have to be careful. CA must identify and consider the expectation of senior management, board, and other stakeholders for internal audit opinions and other conclusions. See, now stakeholder by priorities. Now, first we mentioned we'll do the collaboration. What is collaboration meaning? That is for people who have high influence, low impact. So internal assurance providers, who are they? They are internal assurance providers like law or finance or risk managers, senior executives in business lines. They may be a shop floor manager. They could be some logistic manager. Audit clients, look at audit. Auditor general, legislative auditor, corporate secretary. These are the people who can we collaborate. We collaborate because they are sort of high in influence but low in impact, but to keep them also in priorities. And critical stakeholders, as I mentioned, it's a CEO, chief of audit committee members, CFO, C-suite. So all these people are critical because they're high influence people, they're high impact people. Then look at the thing, low influence and low impact. They just monitor and impact, monitor and inform, like accounting practice and other members in public sector. So professional leaders, third-party service providers, you have to keep them in your priority, but much lower. Then professional liaison, like the IA, ISACA, CPA, CA. So this is a typical shareholder relationship program, relationship management program, because you cannot do everything. You have to by memory. You have to sometimes put those things in paper. So what is that? Like chief audit executive, chief executive officer, CEO. You're powerful as a key champion, relationship. They're powerful. And high level, insignificant issue. Whose responsibility is to keep the relationship is chief audit executive. He has to maintain that, not your senior auditor or assistant manager. How frequently you should meet or talk to him, and it should be formal, at least quarterly, scheduled meeting as necessary. And how and what is provided, timely insight on certain important issues. And chair of audit committee, critical, again, CA reports to it. And what the stakeholder, they're assuring they're part of the corporate governance thing. CAE has to do it. Monthly discussion should be there. Scheduled audit committee meeting should be there. In-camera session as part of all audit committee meeting as required. So formal audit committee scheduled, offline discussion also. How and what to be provided. So now stakeholder relationship management action step. We talked about stakeholder relationship, but we talked about prioritizing stakeholders. Then based on stakeholders, what should be whether you collaborate, monitor, or critical stakeholders, you take it in the high level or have a professional liaison. And we also have a stakeholder relations management program. So how do now go the step further, action step? Develop stakeholder relationship policy and have it endorsed by chief audit executive and audit committee. Have a policy. How are we going to manage the stakeholder? Include a copy of stakeholder relationship management policy on the intranet side, that is internal side, not in the website, and distribute to key stakeholders the way they want. Document operational elements of stakeholder relations management program with an audit manual, arrangements in the audit manual, knowledge management arrangements in audit manual. Implement against stakeholder management, document how it will operate, what roles it will have, who play the role, and what are the knowledge management of it. And frequently, or on a regular basis, at least once in year, not unless there is some major things happening in the organization, regularly evaluate it and check how it is going. Now I want to check how are we doing with time. How are we doing with time? Anyone there? Okay, I have few more slides. I just want to say internal auditing, assurance, insight and objective. What are the stakeholders value in internal auditing? The value of internal auditing for stakeholders. We provide assurance, we provide insight and objectivity. These are the three criteria governing bodies and senior management rely on internal auditing for objective assurance, insight, and control process. Now, assurance is governance, risk and control. That is part of assurance. Insight is catalyst, analysis, and assessments. That's insight comes from these three activities. The objectivity is integrity, accountability, and independence. So these are, I think, the fundamental things. I don't want to delve deep into this, all these. So these are the benefits for stakeholders. Communicate. There are two things I said: communication and what it benefits to the stakeholders. What benefit we give to the stakeholders. So this is how internal audit stakeholder management benefits. One is communication should be clear and consistent, regular and relevant, transparent and honest, two-way, because you listen and give feedback, promotes organizational improvement. That same thing, if you look at the benefits it derives, demonstrate how internal audit adds value. In a nutshell, how it demonstrates audit value, benefit to stakeholder, that how it adds value. Now, this is the delivery model. This is one of my last few slides. Then I'll skip to question and answers in 5 minutes. So, level one is initial. This is delivering stakeholder value capably. So, no sustainable repeated capability dependent on individual efforts. So, that's an initial level one internal audit capability. Second is sustainable, repeatable internal audit practices and procedures. That is infrastructure. You create an infrastructure for audit, which creates a sustainability. We create some documents. We create some methodologies for audit. We have an audit files for these, create an audit files or a program or a plan. Then management, third level is integrated. Uniformly applied the management practice, uniformly applied it. That also integrated with other providers, assurance providers and others. So then fourth level is managing the audit and information, internal integrates information from across the organization to improve governance and risk management. The highest level 5 is internal audit, learning from inside and outside to the organization for continuous improvement. So whatever I told earlier, and it gets into this level of capability, internal audit maturity or capability model. So most of the time it is an infrastructure to optimizing model, or it can be integrated to optimizing. Really speaking, optimizing is it's really a journey, not a destination, because you have to continuously optimize things. So I'll take the last one important internal audit. We have to do all this, we have to transform internal. How do we transform the current time? With a lot of changes that are happening in last 3 or 4 years, how do we do? Embed continuous risk sensing process, continuous auditing, continuous risk sensing, not point out time, not a particular day. Second, use external, internal data for risk. Identify, monitor both external and internal data for risk. Today, it's all available. Even there are tools like Axeles which comes up with a lot of embedded, a lot of inbuilt data, which you can use it for many purposes. Pool of resources. When you have an audit staff, don't only have particular age group, I want more experience. Have the net gen people, then people who are more savvy, tech savvy, people with more business and audit acumen. So you need a mix of people to do well. Agile and responsive audit spectrum. That means more frequently, more AI and neural network enable precise precision audit. Artificial intelligence is here to stay, and it will influence audit to a great extent. And how we use it is what will make a difference. Both leverage data. So in fact, a lot of jobs in the countries like US, I know at least a dozen of people or more whom I interacted, they are all working in internal audit department. They are data analytics people. They are engineers. They're qualified in data analytics, qualified in doing something in AI, doing something in ML, and they are in internal audit. And that's a big scope that has gone to them, and audit has benefited out of their knowledge. So we have advanced abundance of pressures, but with pressure comes, the price of greatness is responsibility. And I'll always like to say this: positive pressure is a privilege. If we don't have that pressure, you will not grow. We will not learn unless we have a pressure. So positive pressure is a privilege. The price of greatness is the responsibility we take in all these counts. If you look at this balancing assurance with rising stakeholder expectation, increased regulator scrutiny, all these make us a better human being, as a better auditor, better individual. So I'll just skip this. This is an evolution. So this, I'll just say, you think what, as a conclusion, coordinate activities with other providers. They integrated assurance is here to stay. Board or audit committee don't want to hear reports on 6 people. We have to coordinate and to minimize and avoid duplications and give a more informed decisions. Trusted advisor of manager, earn that trust. Professionalism, ethical behavior, being knowledgeable, promptness and delivery. Consultation with external auditors. It's very important. I mean, many people like to shy away because we don't know what to disclose to external auditors, because the company may not like you disclose a couple of things. Help audit committee to understand how well organization is achieving a mandate. So, or how well audit committee is fulfilling its governance role effectively. Good working relationship with board. I have a meeting with the board member weekly once. Tuesday between 7 to 7:30, every Tuesday. The board member, he comes to his office and we have a meeting. That gives the relationship open. That also makes him speak about his issues, which I could be able to help. So create that stakeholder expectations in the sense that will give us a value, that will give us a visibility, that will give us something like even what we say, our job profile as internal audit professional, much bigger status. So we are doing well in the ISO domain. Is that enough? Okay, the world is changing too fast to stay comfortable. We can't stay all. Okay, people are happy about us. We are getting 60 or 79 rating, and we are getting our increments and promotions. We have our stakeholders are not looking for another person. That means your job is secure. Is that enough? The world is too fast to stay comfortable. Embrace going and emerging risk. Build relationship and communications channels with stakeholders. Keep it open. You have to have that communication or relationship building and other soft skills to maintain it. Deliver insight and foresight, not just hindsight. I like this statement by Eleanor Roosevelt. Do one thing every day that scares you. Thank you very much. And depending on the time, I'm ready to take some questions.
Yes, sir. We have reasonable time. No worries as far as time is concerned.
Okay.
I'll just see the questions posted by because there are more than 200, 250 members who have joined to listen this from various places, different locations.
Thank you.
So just give me a minute or so.
Take your time. Take your time.
Yeah. In meanwhile, if other members who have joined, who are there, if they want to post the questions, you can just post in the link that is there. So there is one, I'm not sure whether this is a question or a statement by this member. Board expects the internal auditor to use the analytical tools to do descriptive, prospective, and perspective analysis.
Okay.
So what is your take on this, sir?
Yeah, I mentioned during my presentation also this data analytic has become a major a major or a significant part of internal audit, data analytics. So when data analytics have become so important part of audit, because that's also a smart way of doing audit. No, it is if the board expect someone to do a data analytic. See, data to information needs a lot of skills. You have to analyze data, get quality information. So you will get the first quality data, then make quality information, which will help the quality decision making. So the data to information to decision making, there is a connection. So we should know the objective. What is it for? Data analytic done, and ensure that we have a correct data. And third is that we analyze the data for the purpose for which, for the decision support, so that the analyzed data is made into an information, a quality information for decision support. So it is part and parcel, but many times I deal with data analytics, but I have a person who is specialized in it. Of course, he's not 24/7 data. He's an IT auditor, but he also good in knowing, collecting the correct data, because many times it's not ready-made. So you have to get it from different sources. You have to validate the data, ensure, because sometimes wrong information is worse than no information. So you have to be very careful about it. And it is going to stay, because many people say data is the new gold or new oil. It is going to make a huge difference in all.
Okay. Sir, there is another point raised. After introduction of ESG, BRSR, the definition of stakeholder is all inclusive.
It's a good observation. ESG, it is, even to the extent people say it is part of even CSR. Many people even want to stop CSR and focus on CSR, with corporate social responsibility, and to focus on ESG. It's the current thing. ESG regulations, particularly in many parts of the world, is still very nascent. It's not mature. There's no effective regulation. I don't know about Indian laws as of now, but as far as country like Qatar or other Middle East, we still don't have a regulation other than now, say, we have environmental separate safety, social aspect related to governance. G is about governance. These are there, separate laws of that. ESG has a report, what format it should be, and how frequently it should be done. All these are still in a very nascent state. So it is not still developed as far as my experience in this part of the world is concerned. That it could have been much more matured in in the US or in more developed nations.
So there's one more question. Please expand on systematic or thematic reviews. Would like to understand what is the focus typically of such reviews.
Systematic and thematic.
I don't know whether there's any spelling mistake or
Thematic also is correct. It's correct.
thematic reviews. Would like to understand what is the focus typically of such reviews.
No, it's very difficult to say without knowing the context in which he is talking. No, it's no thematic review or systematic review. I'm not able to make an opinion or.
Okay, so the member who has posted this, if you can just give the context in which you want to ask. Till then, we will take another question.
Okay.
Need your view on how to address conflicts with auditee or reservation from auditee side to accept the audit observations.
Can you read again, please?
Yeah, sorry. Need your view on how to address the conflicts with the auditee or reservations from the auditee side to accept any of the audit observations made.
Okay, it's an age-old question. So, since audit started, it's auditee. We don't even now call auditee. That's why we call it audit client. Auditee, we do not call it client. We call it audit client. Even that become obsolete. People wanted to have a better word. See, there is a saying, there is two fundamental lies, they said. An auditor going to the client or auditee saying that we are here to help you. And the client saying that, oh, you're welcome. They said these two are the biggest lies on earth. So, but typically, auditors move much ahead of all these things. See, a good audit report, no matter how positive the people are on the top, will definitely reflect on the audit client. In good internal audit report with findings related to some major. I don't want to say it need not be a wrong things, but some major observations. It can be non-compliance with something, or it can be something related to utilization, efficiency, effectiveness. It can be anything. It will impact on that. Why not? Why you did find it? So he may become a defensive. It is but natural. Anybody, no one likes to be. Even when we do as an auditor, my department goes for quality assurance and improvement program, UIP, which is a mandatory under the Institute of Internal Audit standards. Once in 5 years, when they come up with audit or internal audit, we are also sort of defensive. In the sense, we tell them, we try to prove them. And also, even to the global companies, we'll ask, where are you? How did you train somebody on, say, for example, money laundering, anti-money laundering, or train somebody on identifying the kickbacks or those sort of things. So did you train? So even though we would have trained, they wanted to see even the training material. So what I'm saying is there could be a dispute, but finally what we have to look at is the interest of the organization. This recommendation, how it has impacted, how it is helping the organization to improve. If that is the final test on the recommendation. If the organization is going to improve in terms of whether it is financially, whether it is in a better process or better reporting, quality of reporting, that is the crux. So the problem should be solved in that way. And many times, if it is something not so serious, it can be, allowed to be corrected, and we can even give a milder report. But in many cases, even at the cost of relationship with audit client or auditee, we may have to put it on paper. We cannot resolve. We can only maybe raise the level up.
Sir, another question. What should auditor do when the management has not implemented a formal risk management framework?
Mhm. Yeah. It happens quite often. See, as I mentioned earlier, if you are, I don't know whether it's an auditor's responsibility to facilitate or even to handle risk management function, because in bigger companies or in regulated environments and all that, risk managers are different from internal auditors. Complaints managers are different from internal auditors. Even excellence managers are different from internal auditors. So in that case, you can, if it is risk management is different from internal audit, you can even report on the effectiveness of risk management function, risk management, effectiveness of not function, risk management in the organization. You can give a report to audit committee or to CEO. You don't have a proper framework and it is not been implemented. So the risk management practice is vulnerable. You can stay there. If you are part as auditor, you are still running the risk management, which is also not incorrect unless there is no conflict of interest or anything like that, and your management not implementing. Your only choice is to educate management. What are the pros and cons, and how it is important, how it can deliver value. All this can be informed to on either formally, informally, or using your persuasive skills, using your motivational skills. Try to sell the concept with facts and figures. With probably, many times even in the Middle East, people accept only if we give an example. So, and sometimes what they are here to talk, what they are interested to hear first, to get an attention span and tell what you want to say. So you have to sometimes use like that. Tell them not about risk, tell them about something else, and bring that risk management issue along with it, and bring their agreement to improve.
The next question will go. Should internal auditor in that case assume the responsibilities to manage the risk or to execute the risk? It is continuing one. Should internal auditor in that case assume the responsibility to manage the risk or to execute the risk management decision? So if management is not doing, should he take it forward or he should?
Finally, if you can get it implemented, so long as you have that independence. It should not, you implement it, so you cannot report. That sort of thing should not happen in the future. If it is understood by audit committee or it's understood by the CEO or board, that risk management function is held by internal audit, and there is a certain reporting methodology and framework which is being used, and that sort of substantiate. There's nothing wrong in audit getting it in the shoes of the whosoever is to implement the risk management team or the corporate management, and get it executed, because finally the goal is to have better governance and better sustainability.
Okay. So next question. I understand systems audit, but what are the examples of themes based on which audits are carried out? For example, would revenue leakage audit represent a theme?
These are all very, something very fancy or jargons. and I don't, in the audit terminology, in a larger scale, I'm looking at, say, the readings from the Institute of Internal Auditors or Information Systems Audit or Certified Fraud Examiners Association. These are not defined to state something. The practices could differ. The practices could differ. Like you said, revenue leakage, correct? Revenue leakage particularly I found revenue leakage as in airline industry or somewhere, and I found in hospitality industry the revenue leakage becomes very critical, or even the medical, the health industry. One of the highest revenue leakage in the world happens due to fraudulent or inappropriate means is in the health industry because of the insurance and other factor that goes with it. So, depending on the vertical in which you are working, and the typical risk as impact, likelihood, then the factors that influence in the business processes, and again when soft controls such as the management, the quality of management, the supervisory levels of control, digitalization, all that impacts. So there is no universal answer. One has to look at one's own case from the industry perspective or the company perspective and apply that portion of like auditing.
So the next one, rather than question, it is a statement. The biggest problem of internal audit is that other departments does not support the auditors.
Oh, it's a very general statement, but factually also true. I'm an auditor for now. I passed my exam in 1983. CXR. Before my graduation, I started earlier. Those days we could do early +2, or we finished 12th grade or something. Then I wrote the entrance exam, got into CA, and I passed all in first attempt. So I could do that. So these. So I'm an auditor for life. Whether I like it or not, I don't know to do anything else. So, of course, a period of time I was in the corporate management in Maruti. I was part of the CEO and director of finance team for board purpose and Suzuki responsibility, Suzuki reporting and all that stuff. So, what I'm saying is people don't like audit. Has been a fact, but you need not be disliked. In fact, one video was taken by UAE Internal Audit Association. Then Abdul Qadir Obaid Ali, he's in the UAE National. He's a good friend of mine for the past 2 decades. We know each other for long. He took a video and he went around to many people in a company, in the same company, and he said, "Will you call internal auditors for a party on this Thursday, the weekend?" So I think almost 100% people said no. I don't want. They come as a spy. They don't. They are boring people. They are not fun, loving people like that. But it's a matter of perception. But it's a lot has been changed. I for one is a part of Toastmasters, which I don't know. Many of you know about it, which is a public speaking and leadership forum. I'm here for 20 years in Toastmasters. So I'm handling the entire region, Middle East and Pakistan. Handling meaning overseeing that Toastmasters clubs, and so there, it's all fun-loving people. So it's the opposite of auditors. They are more loving, more dancing, some stuff like that. So you can be, you don't have to be a dual personality. You can match anywhere.
Yeah, probably now I think all the questions are over.
Okay.
Yeah. Formally, I would like to propose a vote of thanks. As a moderator, I am thankful to our today's speakers. He is Rajeshwar sir, for giving your time and giving us knowledge and insight about this very important topic on internal audit, which can provide value addition. And provide doing internal audit or providing value addition through internal audit is like riding bicycles. We have to continuously be doing that. So such sessions, they definitely give us more insight on how one has to go about internal audit, understand the expectations, and deliver them for all the stakeholders, including our peer members. So I'm thankful to you, sir, for this. I am also thankful to the Chairman Rajendran sir and Vice Chairman Charanjit Singh Nanda sir for taking these efforts and all other various initiatives and efforts that they are taking as Chairman and as Vice Chairman of the board. I'm thankful to all the participants who have been with us for last 2 hours and who have been listening to us patiently. And also thankful to the team, Aarti ma'am, Survi ma'am, Ayasa technical team. So thank you. So we'll end this session here. Thank you. Thank you, sir.
Thank you very much. Thank you very much.
Yeah.
Pleasure is mine. Thank you. Thanks for the opportunity.
Yes, thank you.